Understanding loan sharks, risks, alternatives, and insights. Loan sharks are notorious figures in the realm of finance, often associated with underground lending practices that exploit vulnerable individuals. These lenders operate in murky waters, charging exorbitant interest rates and sometimes resorting to intimidation to ensure repayment. The reality of loan sharks raises serious ethical and legal concerns in personal finance, making it crucial to understand their operations, risks involved, and the options available instead. What is a loan shark? A loan shark is typically an individual or entity that provides loans at extraordinarily high interest rates, often violating established legal lending limits. Their operations are usually unregulated, and they often resort to threats and violence to recover their money. Unlike legitimate lenders, loan sharks do not conduct background checks, credit reports, or assess the borrower's capability to repay the loan, putting individuals in precarious financial situations. Key characteristics. Extremely high interest rates. Rates charged by loan sharks can be astronomically above established legal limits, often exceeding 100% or more, depending on the locality. Intimidation tactics. Many loan sharks threaten physical harm or other forms of intimidation to collect debts. Origin of funds. The funds they lend are often untraceable and may stem from illicit activities. How a loan shark operates. Loan sharks typically thrive in underbanked communities, accessing potential borrowers through personal networks or online platforms. They usually offer loans with terms that are heavily skewed in their favor. Example of a loan shark transaction. A loan shark might provide $10,000 with an expectation of repayment of $20,000 within just 30 days. Such terms create an untenable situation for borrowers, who, feeling cornered, may feel compelled to agree to harsh repayment conditions. Loan sharks are known for their unpredictable nature. In many instances, they can demand repayment on short notice, making it nearly impossible for borrowers to meet such demands without severe financial strain. Loan sharks versus payday lenders. While payday lenders may operate in a manner resembling that of loan sharks, there are key differences. Legal status. Payday lenders are generally legal entities licensed to operate under state laws. They often charge high interest rates but must adhere to regulatory limits. Interest rates. The maximum interest rates imposed on payday lenders can reach up to 400% annually in some jurisdictions, but loan sharks often far surpass these rates. Repayment practices. Unlike loan sharks, payday lenders typically follow legal collection practices. While their methods can still be considered predatory, they lack the violent and aggressive tactics used by loan sharks. The legal perspective. Borrowing from a loan shark is not in itself illegal, but it presents significant risks. The lenders undertaking such activities are typically operating outside the law, and any agreement made with them can cite illegal lending practices. The borrowers may find themselves facing not only financial hardships but also potential legal repercussions stemming from the lender's unlawful operations. What is a payday loan? A payday loan is a type of short-term loan designed to bridge the gap until the borrower's next payday. However, these loans carry high interest rates and can trap borrowers in a cycle of debt, making them akin to the loans offered by sharks in the finance world. Alternatives to loan sharks and payday loans. If you find yourself needing quick money, consider these safer alternatives. Personal loans from credit unions or banks. Even individuals with poor credit might qualify for personal loans with reasonable terms. Borrowing from family or friends. This option often comes without interest or with much lower rates and more flexible repayment options. Nonprofit organizations. Many nonprofits provide financial assistance or low-interest loans to those in need, enabling individuals to avoid predatory lending practices. Government assistance programs. Depending on your circumstances, various government programs cater to families in financial distress. Conclusion. Loan sharks often capitalize on the dire financial situations of individuals, making it essential to be aware of the dangers they pose and the impact their services can have on your financial security. When faced with an immediate cash need, consider all available legal and ethical alternatives before resorting to potentially dangerous borrowing methods. Engaging with a loan shark frequently leads to devastating financial consequences and even personal harm. Always assess your options carefully and seek assistance from legitimate lending sources or supportive communities.